podcast is brought to you by DABA, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the DABA app on your favorite Google and Apple app stores. We start with good news. Even during a shortened end-of-year trading week, the regional market continues to offer meaningful opportunities, with strong performances on selected stocks and a bond market that once again confirms its role as a pillar of stability for investors. Let us take the time to unpack what happened on the BRVM between December 22 and December 26th, and more importantly, what it means for you as an investor across Francophone West Africa. By the end of the week, the main BRVM indices closed in negative territory. The BRVM Composite Index declined to around 340 points. The BRVM 30 Index also moved lower, while the BRVM Prestige Index showed a more moderate decline. What does this really mean? A decline in indices does not automatically signal a weak market. In this case, the context matters. This was a year-end week marked by profit-taking and reduced participation. Trading volumes fell sharply, and total transaction value dropped to just under 6 billion francs CFA. For investors, this reflects caution rather than panic. Many market participants chose to lock in gains accumulated earlier in the year and wait for clearer positioning at the start of the new year. This behavior is typical, especially in emerging markets where liquidity naturally slows in December. Let us now look at the most active stocks and the broader equity trends. Despite the overall market pullback, several stocks continued to attract strong interest. Sonatel Senegal remained the most actively traded stock, even though it recorded a slight weekly decline. Ecobank Côte d'Ivoire and Société Générale Côte d'Ivoire also posted solid trading volumes, confirming their status as benchmark stocks on the regional exchange. Why does this matter? These stocks act as market anchors. When they remain liquid and actively traded, it signals that long-term confidence among both institutional and retail investors remains intact, even during consolidation phases. Now let us turn to the highlights of the week, the top gainers. The strongest weekly performance came from a construction and infrastructure-related stock, which surged to close around 1,425 francs CFA. This sharp rise was driven by renewed speculative interest, supported by expectations linked to major infrastructure projects. For investors, the message is clear. The market is starting to price in future economic activity well before it appears in financial statements. Another notable performer came from the publishing and media sector, posting a gain of more than 15% over the week. This move lifted the entire sector, reminding investors that some segments of the BRVM remain underfollowed and can deliver outsized returns when attention returns. The National Lottery of Benin also recorded a strong advance, supported by expectations of increased activity linked to upcoming regional sporting events. Here, investors are clearly looking beyond historical results and incorporating future catalysts into their valuation models. Let's now address the most significant declines of the week. The sharpest correction was recorded by a stock that fell to around 1,350 francs CFA. This pullback followed a strong rally driven by improved profitability. For investors, this movement represents a technical correction. After rapid gains, markets often pause as participants take profits. Another large capitalization stock also recorded a notable decline after delivering exceptional performance earlier in the year. When a stock has risen several 100% in a single year, consolidation phases are not only normal but necessary to support a healthier long-term trend. A utility and energy-related stock also moved lower during the week. This serves as a reminder of a core investment principle. Even fundamentally strong companies can experience short-term pullbacks. The key is distinguishing between a temporary market adjustment and a genuine deterioration in fundamentals. What should investors take away from the equity market this week? While the majority of stocks declined, the strong gains seen in select names indicate that capital has not exited the market. Instead, it is being reallocated selectively toward stocks perceived as attractively valued or supported by forward-looking narratives. Let us now shift to the bond market, often less discussed but critical in building a resilient investment strategy. Here again, the news is constructive. Bond market capitalization edged higher, reaching more than 11,400 billion francs CFA. What does this tell us? It confirms that bonds continue to attract investors seeking predictable income and capital preservation. While trading activity softened slightly, demand remained concentrated in high-quality sovereign issuances. Senegal's sovereign bond with a 10-year maturity dominated trading activity, with over 2 billion francs CFA exchanged during the week. Why such interest? Because these instruments offer a compelling balance between yield and maturity. For investors, they provide visibility and stability in a region where predictable cash flows are highly valued. Several Ivorian bonds with 8-year and 10-year maturities also continue to offer attractive yields, often above 7%. In an environment where inflation remains a concern, these yield levels help protect purchasing power while limiting volatility compared to equities. The key takeaway from the bond market this week is simple. Investors remain cautious but engaged. Capital is being allocated towards solid issuers and intermediate maturities that combine income generation with risk control. As we look ahead to the final trading week of the year, several themes stand out. Recent price adjustments have brought valuation levels back into attractive territory across multiple sectors. Analysts continue to identify opportunities among well-established companies with strong fundamentals that have temporarily come under pressure. Historically, periods of lower market activity often provide the best entry points for medium and long-term investors. On the bond side, intermediate maturity instruments continue to offer competitive yields, particularly appealing to investors seeking stable income in franc CFA. Some of the most compelling opportunities for the week ahead remain reserved for our premium subscribers. And this is precisely where DABA Pro becomes essential. With DABA Pro, you gain access to weekly investment recommendations, in-depth stock analysis, exclusive data, and reduced transaction fees designed to help you invest with discipline and confidence across African markets. You do not just follow the market, you stay ahead of it. That's all for today's episode. Thanks for listening to the DABA Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the DABA app on your App Store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.